So I just finished up with these two trades. Exactly, you can see it hits the target perfectly in intraday trading. So how you can do this kind of trades and find this kind of spikes moves that will make your trading skyrockets. So let's learn. So today's video we're gonna learn the candlestick patterns, exactly which patterns you exactly want to find in your intraday trading, and the most important thing, the position of the pattern is most important. This is not exactly necessary the pattern, the more necessary is the position of the candlestick pattern. Okay, so what exactly you need to do is exactly you need a flow of the candlestick patterns. Okay, you just need a flow of upside direction or downside direction. As this in an upside move, then 8 candles must be in a row, then should make a candlestick pattern like a bearish pattern. Like this is like market starts here and market starts going to upside and it's a 8 candle in a row, and you just need for your selling candle. It can be a bullish engulfing candle, bearish engulfing candle, bearish harami candle, which is a baby candle which engulfs the previous candle. I mean the previous candle engulfs the recent next candle, and it can maybe a shooting star candle. Okay, so this type of candles can make market. If after a row 8 candles it makes market and it starts falling, you can see it's again 4 starts falling. So now we are gonna talking about what exactly you need to see on the chart, exactly the candlestick patterns, and the more important is the position of the candlestick patterns. You can see the patterns. It's a bullish engulfing pattern. There's a bearish harami pattern, but the most important is the position of the pattern. Okay, so intraday trades. Like it's the 24th of April and market came down in a flow, and it should be a 8 candle row. When market starts here and comes down from upside down, it should be a 8 candle coming up from upside to downside, and then after the 8 candle the ninth one should be the pattern, which one should be the bullish pattern for the upside trade, and market starts here and going upside, then green candle should be formed in a row, and then you can find a bearish pattern and you should sell below the bearish pattern and look for 1:2 targets. So this is the main concept of the trading. Exactly, uh, the pattern is not more than important of the position of the pattern. Okay, so you just need to look at this, and then we are going forward for some examples. So what exactly market did today? Market opens an upside and came down from upside down, and it was an 8 candle flow, and here in the ninth one and 10th one market makes a bullish pattern, and as soon as the bullish pattern breaks upside, and it's just went sideways for a few moments, and then it hits the target of 1:2, and then market again came upside from downside with the 8 candle flow and makes a bearish pattern, and as soon as the bearish pattern breaks downside it came down and hit the 1:2. So this is today's example. We're going to see the previous few days example that will clear your vision and clarity in this trading. So the best example for you guys, you just can see market just came down at the 3 candle and makes a bullish pattern. This is the red hammer, so it's also a bullish. So as of it's a break upside, it went up and then came downside and breaks the this candle low, and use SL is hit. So then market just went upside and came down with the 8 candle rule, and when it makes a bullish pattern it's broke upside and market just went upside with a 1:2 and 1:3 target. And then when market went upside and makes an 8 candle flow and makes a pattern, you can see there it's a pattern, bearish harami pattern, but this low wasn't broke. Before that market broke its upside, so this pattern was unable, and market as soon as this pattern breaks downside and market just came and 1:2. So you just saw what you need to do. Just you need to focus on what you don't need to do, just like this chart. You just saw market opens here and markets came downside, came upside, came downside, came upside, but there is not a flow. Okay, there is not a flow. It was a sideways pattern. You just need 8 candle rule. You just understand 8 candle rule and then just need a pattern. Market just opens here. You just assume market opens here and market comes downside, and after coming downside after the 8 candle you just need a bullish pattern. From downside you're just looking for the upside pattern. This is a trend reversal sign. You just think like trend reversal sign. Market comes downside, so you just need to look for upside trades. Market just opens here and market goes upside, you just need to look for the downside trades. From upside, you just need to sell. From downside, you just need to buy. Okay, so this is the whole strategy video from my side. So I think you understand this pattern. I think you understand the position of the pattern, and you just look the trades. This is live. I will come live someday and share with you the guys the exact what you need to see on the charts with more examples videos and with more strategy videos. So as of now, this was for my side. So hit subscribe the button and hit the like button if you like this video, and I will meet you some other day in some other video. Thank you guys.